Welcome to Option Trades Today. I'm Tony the Baptiste, and I have not one, but two trade ideas for you today. September 26, 2023. But first, let's take a look at the market and what a market it is. Even the S&P's down down $50 right now. 51 and change, that's 51 handles. NASDAQ down 193. Russell down almost 11, and the Dow down 320 on a percentage basis. The Russell is actually the strongest, and even the S&Ps and the NASDAQ presently the weakest of the group on a percentage basis. But look at volatility, 1855, just off of its highs of 1870. I don't know what volatility is going to do for the next couple of days, but I do know this. It is back to its old lows that we saw back in July, August, earlier this year when volatility crashed from 24 down to 18. We have come off this bottom of 15 and change to 18 and change, and what a last 4 or 5 days in volatility it has been. And because, if you've been listening to this podcast for a long time, you know I love to watch volatility on products, and when volatility expands, we like to sell premium in it. So we've got a lot more things to look at, a lot more IVX 5-day changes to take a look at. And one of those that we look at for me today is going to be DocuSign. And let me get to the reason why. Because I know the first thing you're going to say here is DocuSign has a relatively low IV rank of 11. And it does. But look at over the last 5 days. Up over 5%, one of the larger movements in implied volatility over the last 5 days, and the stock is down today following the market. Now, the last piece I would need is DocuSign on its butt? Yes, DocuSign certainly is. As a matter of fact, it's hitting lows that it saw back in November when volatility was expanding again. Okay, so now we've got a stock, and I'm a contrarian, that's going lower. Volatility is trending higher, or volatility has gone higher. And I would think that at this time, I might put on a trade that's a little bit omnidirectional, but slightly bullish. That's right. When the stuff is hitting the fan and the market's going lower, I like to look for completely beaten up stocks that might behave better if we get a little bit of a rally. I have it up here for you already. What I'm looking at a classic Jade lizard. Let's put it over here. Well, you know what? Let's look at the Greeks first. My probability of profit, 72%. I like that. I got a positive theta decay of $2.45 per day for holding this risk. I like that. My delta on the trade is positive 25. I like that too because I want to be long the stock. My max profit, obviously, the credit received, $2.56. My max loss, well, if the stock goes to zero, I guess it's $3,745, but I'm only using about $900 in buying power in a margin account. Now, I'm mentioning margin account to you, and here's the classic Jade Lizard. Why is it classic? Well, my put is out of the money. It's the 40 put. Stock is almost $41. I'm short the 42 call. Stock is $41, both out of the money. I'm defining the risk by buying on the upside, by buying the 45 calls. And if I'm doing a Jade Lizard or a classic Jade Lizard, I have taken into consideration this $2.50. That's the width of the strike of the call spread, this $2.50. And I've collected more premium than the width of the strikes, which is $2.50. In this case, $2.56. I actually got filled at $2.51. How do I know that? Well, you can easily go right here, go down to the follow page, and you'll see here I have already clicked on Bob the Trader. I'll go to DocuSign. I filled it earlier today. I have a 72 pop, and it's $2.51. If you click on here, I always leave you a little bit of a description. Anytime I do change the trade, meaning roll it or close it or add to a position or do anything to it, I'll give you a little bit of a quotation here on what I'm doing. You can see here from earlier today, I had closed an XPX trade around $2.30. I laid it back out for another $3.90 while we were doing the show. Here's where I bought it back. I'm sorry, $2.35 when I bought it back on the 22nd. I only bought back 50% of that position, so I sold it back out as the market was selling off. You probably could do it better than I did. But let's get back to that DocuSign trade. Classic Jade Lizard. Why is it a classic Jade Lizard? Well, because the strikes, as I said, are both out of the money. Those are my two short strikes, and I've collected over the width of the strikes. In this case, it's $2.50. I did mine at $2.51. What's your break even on here? Well, your break even, since you have a naked put, is the 40 put minus the $2.50 that you received for this. So your break even on this is below $37.50. Let's just call it $37.50. That's where that little green line is. You have this 72% pop because you have no risk to the upside on this trade. Now, if you're in a non-margin account, an IRA account, you'd be using almost $4,000 in buying power here. So what could you do to reduce some of that risk? Well, or some of that buying power, really. You could buy what I consider a worthless out-of-the-money option just to use less buying power. In this example, I'm just going to pick the 30 put, and you'll see here that I'm using $750, actually less than what you would use in a margin account. Why is it $750? Because my break even is approximately $37.50, and $7.50 to my 30 put is $750. I'm just rounding here. Look what it does when you buy this little option for 10 cents. It changes your pop from over 70% to 45%. Why? Because if the stock goes to 100 now, you will lose $5. Now that's just a $5 bill, not $500, because the width of the strikes, $2.50. You only did it for $2.45. You would lose $5. Take away this leg, and you'll see that the probability of profit goes to 72. All right, what's another stock that I'd like to take a look at and also have made a trade on? It's a little bit of a higher price stock. It's Oracle, ORCL. Oracle down $3.60 right now. Oracle correlation to the overall market is only 0.43. It does not have a high correlation to the market, but it has been going down with the market, as you can see here over the last couple of weeks. The implied volatility, or IV rank, has really expanded here. Not as high as it has been when the stock was going straight up to the moon, which is an interesting point that I would like to bring to you right now. When you're trading equities, and we're always looking for high implied volatilities, when equities go lower, unlike ETFs, when equities go lower, volatility usually contracts. In an ETF like SPY or the Qs, when that product goes lower, like what we have today in the market, volatility expands. Volatility expands in ETFs and usually in individual stocks that don't have earnings. If the stock is going lower, volatility actually contracts. But we don't have that today right now, so I think it's an advantage that I want to take advantage of. Let's take a look at what's going on. Over the last 5 days, as the stock has been going lower, volatility has been expanding by 3.3%. IV rank is 34, relatively high. Neither one of these stocks have earnings. Earnings are until December in Oracle and in DocuSign. And you can see here it's down near the lows of a day. So I'm probably going to either go omnidirectional or just sell outright premium. I'm going to go omnidirectional here. I'm going to go to November, just like I did in DocuSign. I'm going to show you another way to load up a Jade Lizard, or another way of looking at it. I say this is not so classic because I'm going to sell the at the money put or just in the money put, and I'm going to sell the at the money call or just at the money or just outside the money, meaning 105. The stock is 104.75. I'm just going to round up here. So I'm selling the at the money straddle. It is a higher price stock, and I'm subject to $5 wide strikes. So for a Jade Lizard, I have to go to the 110 call. But look at this. I'm collecting $6.30 for this trade, significantly more than the DocuSign trade that I had on a relative basis, $5 wide. If this stock goes to 200, I could make $1.35. If the stock closed right at 105, I guess I could make my max profit of $635, but you know that's unrealistic and not what we're looking to do. On both of these trades, I'm looking to make the classic amount of money, around $1, maybe a little bit less in DocuSign, maybe a little bit more in Oracle, because I have more delta. You have almost 31 deltas in Oracle. I only had 25 in DocuSign. My probability of profit is still in the same region, around 71%, and my theta decay is almost, well, not quite double, but double, $4.40. My max loss, obviously the stock could go to 0. I am naked short a 105 put. I've collected $6.30 for it, which means my break even for this is around, well, right where this little green line is. Let's call it, what would that be? $98 in change, 98.65 or something like that. That would be my break even on the stock. Because look at this, my max loss is $9,865, which means my math was correct for that moment. The buying power is $2,400. I'm rounding up in a margin account. But if you were in an IRA account, which I know a lot of people trade in IRA accounts, you would be using almost $10,400 in buying power. So what's something you could go and do, just like you would want to do in DocuSign if you want to use less buying power? Here, you'd be using significantly less buying power. You can go and buy the 80 put for 15, 16, 17 cents. Of course, your pop is not going to change that much because we've collected more than the width of the strikes here. Remember in my DocuSign example, I did not collect the width of the call spread, which was $2.50. Here, I'm significantly more. So my pop doesn't change here. My buying power goes down to almost $1,900 from the $2,400 that we saw a moment ago, or in a IRA account, the $10,400 you would see. I have the money available, so I'm not going to buy that extra wing, but you certainly could. All right, we went through a lot of stuff right there. I hope you caught it all. But you know what else I need you to do? Well, the reason why we run this show, Option Trades Today, and do everything on Tasty Live for free is because you bring your account or open a new account or transfer an account to Tasty Trade. That's the brokerage firm and the technology that I showed you up on the screen. You too can have everything that I have at your fingertips, and they even give you some bonuses for bringing your account to Tasty Trade. Check them out. Cash money.